Well, Giles Andrews is co-founder and CEO of Zopa, who offer individuals the chance to borrow and lend money to each other without the need for the bank. Hello, thanks very much for talking to us. So it's been suggested that companies like yours could help bridge the lending gap. How much more are you lending this year compared to last, and how do you match up borrowers and lenders?
Our numbers so far this year are about 60% up on last year, and that mirrors similar growth the year before that. So we're growing very fast. We match our lenders and borrowers in an exclusively online service, so the URL's zopa.com, and we've demonstrated that we can give our savers, or our lenders who are otherwise savers, a better return than if they lent the money to a bank, and provide better value loans than banks do.
But the problem is you're not regulated by the Financial Services Authority and aren't subject to, in fact, any regulation at all.
Well, we're supervised by the Office of Fair Trading, so there is some regulatory oversight. But the lack of regulation by the FSA is something that we've been trying to deal with. So we've been lobbying for regulation for our sector because we think it will be appropriate.
Why aren't you currently regulated, and what are you getting back from the Treasury when you're lobbying for greater regulation? It's not often you see an industry lobby to be regulated more.
Well, I think the Treasury argument is that the businesses like ours should be allowed to compete with each other and grow of their own accord, so grow organically. And, you know, there is some merit to that argument. So I think their view is that right now our sector is too small to warrant regulation, and obviously we're keen to address that by growing very fast and making it worthy of regulation.
But what capital buffers do you have? The banks have to have quite substantial capital buffers now, which is why, one of the reasons, partly, they're not lending so much to small businesses. So what capital buffers do you have?
Well, we don't have any, and that's sort of the point. So if we were to be regulated, I don't think it would be on the side of regulatory capital, because we connect lenders and borrowers directly, so they have a contractual relationship between themselves, which doesn't require external capital. So the regulation we're after is more around how we would run our business, or how the business would continue if we weren't around, and indeed how we responsibly run our business in terms of our lending activity, not around the side of regulatory capital.